Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report if you give me one moment here, and we can read the synopsis on top or read the headline. Euro spikes 400 pips in 3 hours. What does it mean technically? We can read the synopsis. The euro-dollar rallied 400 pips in 3 hours at the end of U.S. trading. Before getting too excited, let's keep the move in perspective. We can read a little more in detail here. Extreme daily ranges have been the norm lately, as the chart above illustrates. Still keep the late day move in perspective. The euro-dollar remains in a contracting range, which may be a bearish triangle. Even a break above the triangle line would not clear the euro-dollar of the range that has been intact since late October. So let's go ahead and pull up the charts. The first chart is the euro-dollar, and as I was mentioning yesterday, there were three specific levels of potential resistance. And let's say you got caught on the wrong side of this 400 pip move. This is a great learning experience, and in terms of the technical levels I set forth yesterday, this white line here, this very sharp, steep line, would be the first level of resistance I mentioned. The next level was that 126.36 area that Jamie had mentioned and I mentioned as well. And then the final level, and the one that gave the most favorable risk-reward, would be the opposite side of the lower support line of the triangle that Jamie is mentioning. And we can actually zoom out a little more to get a little bit better perspective on that triangle pattern. So prices have reached that resistance line. So this is a very important lesson for shorter-term traders, aggressive traders. As I was mentioning yesterday, those resistance lines, the first and second resistance lines, were for more aggressive traders. And this is why it's always extremely important to place our stops and then to honor those stops if the market doesn't do what we expect it to do. And this is a great example on why you should do that, because you can get caught in these moves. So let's say you were patient and you didn't use the first resistance line, but you used the second one of that 26.30 area. We could see prices exploded after that point. So that's why it's, again, very important to have your stops, to set them, and to let the stops get hit if the price action dictates. So now with this setup, is pretty favorable here, in my opinion, to use if you were able to get an entry near the underside of that triangle line. So moving forward now, if you were able to get an entry there, I would keep that keep that trade on and place our stop above the most recent high, which if I can get a print here, would be 127. Excuse me, that's not the right price. If you give me one moment here, 128.51. So if the euro meanders a little bit and actually goes to the upside, I would like the short trade here with a stop above that 128.50 area. The next chart is the dollar-yen, as that's what we have been focusing on in my reports lately, and this is the resistance line that I've been using. Again, prices tested. It didn't get fully to the resistance line, but I would still maintain a slight bearish bias against this resistance line I was mentioning yesterday. If you were able to get an entry over here on this trade, which this is a few reports back, I mentioned yesterday that we might take profits as prices had reached that 96 price target. The same thing would apply here. Hopefully you were able to get an entry, although we didn't get, prices weren't close enough, just borderline to get a good entry with favorable risk reward. So this is something I would look for over the next few hours if you can get an entry close to that resistance line and place our stop. But as I was mentioning, if you've been following my reports, the more times a resistance line is tested, the more likely it is to fail. So with this resistance line, my confidence was high. At this point, it's getting a little lower as each day passes and as each test passes. So the next chart is the Kiwi dollar, and I was mentioning yesterday how I was bullish on the pair, and Jamie was as well. One of the main reasons was that SSI, and we can see that 78.6 level did hold, but this is typical, not a very clean move, a very tricky move. The market kind of picked your pocket here. I was mentioning that if we can get an entry close to that 55.34 area, which was the low of the test of the fib level, placing our stops just beneath that. So it depends exactly where you place your stops. If you were stopped out for a small loss, so be it. That's part of trading. But if you're still in this trade, this is a trade I would continue to hold, placing our stop beneath that low, the low of the test, which is 55.09. So that's something that I would be looking for moving forward. Stay long with a stop below that 55.09 low. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.